Hello guys, welcome back to another Lumley training video. In this one we are going to be doing some in-depth stock analysis, technical analysis over on Carvana, ticker CVNA. So to get straight into it, what are going to be key support and resistances that we're paying attention to going into the short-term future? So as of right now, obviously we're sitting at $9 and around 60 cents. This is a pre-market, obviously it closed around $10. But we're going to be key levels. So if we push to the upside, key levels I'm paying attention to are going to be $16 and $23.25. Reason for that is our first deviation on both the 6-month and the 1 year. But what we can obviously see on Carvana, and which has kind of made a lot of the problem, is, you go back a year, it was sitting around $160, went down to a low of $3.55. When anything is that kind of volatile, sells off that harsh, the deviations, as we can see, are obviously very downtrending, but also makes them very wide. So that means the trading opportunities on this are going to be quite rare, just because obviously the time it's going to take to reach each of these levels is just going to be a lot longer than most normal stocks. So obviously those are our two resistances. We can see we hit that $16, quickly faded back down below it, and it's much clearer on a daily chart. Hit that, instantly kind of came back down, retested that level and failed. So again, these levels can be used in two ways, really, as a day trade or a swing trade, because as long as you can hedge with the options, then they're definitely viable swings as well, because overall we still expect the pullback to happen. But if it's a stock that doesn't have options, they're usually just day trading opportunities that I look at. I don't think I ever have, and don't think I would be holding a naked short without a protection of at least a call or something. So those would be the two closest resistances. If anything went quite crazy, we did continue to break up, I'll be looking at $28, $41, breaking through there would be $53, $62, and I mean obviously we do have levels going further up, but so far off there's not even really much point putting them down as of right now. Now, from a support side then, what do we want to be paying attention to? So at 380, this is our statistical mean over on the 6 months, so definitely a level I'm paying attention to, especially if I was still holding it short bias. That would be my overall final target. We also have our 52-week low at around 155. So really, coming into around this 350 level, quite a bit of support. I'll be watching it as a day trading opportunity, really what happens within this area. But if we start to break below it, again, for me, there is no trading opportunity. There is no levels to really buy. So it'll be a lot more of a gamble if you're buying kind of at these lows in just anticipation that it kind of goes up. But it's, there's no guarantee, because it is kind of a gamble. And it's how long can you hold and how much can you risk. So that's always going to be the thing with these kind of stocks. If it comes down to the low, yes, there may be opportunity, but it's at what kind of risk to get that opportunity. So really the main thing, like on these small caps when I normally talk about them, the main things I'm always paying attention to is a move to the upper levels, and really they just provide good trading opportunities. And that's usually where I look for the opportunities on these small caps, these downtrending stocks, because again it's easy to play with the trend, and so if they start becoming overbought, I know more than likely, okay, they are going to pull back. You're going to have a win rate of at least, or much over 50%, and if you can get a 1-to-1 risk to reward as you can on the credit and the debit spreads, that is already quite a easy and kind of profitable strategy. Anyway, I hope you enjoyed the breakdown on Carvana. If you did, why not drop a like and subscribe and check out this analysis video.